Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Monday. The markets are open. What's going on? Well, the markets are up. The Dow's up about 100. The Nasdaq's up about 30. You see, we had some really good news over the weekend. We had another bank failure. First Republic Bank failed, it taken back by FDIC, sold to JP Morgan. Well, the good assets sold to JP Morgan will be the taxpayers paying for the bad assets. That's just how it works. But this is really good news. Look, in the last 2 months, we've had 3 out of the major 30 banks have failed. That's 10% bank failures. Now, a lot of people think this is normal for an economy. This is Great Depression stuff. We got 10% bank failures already, and we're not close to done. This is a financial crisis, and I'm telling you, it is not played out yet. I think in the next month or two, we'll see more bank failures. Another one, another one, another one. But what does this do? Well, it pushes the market higher. It's good news. Why? Because they think that the government will print trillions and trillions of dollars to keep bailing out the banks, and that'll send the markets higher. And so we got a little bit of a short squeeze going on. We're pushing up. We're to the 4,200 level on the S&P. Resistance zone between 4150 and 4200. Can we push higher? Yeah, we could. I'm still expecting a pullback. I just think this market's going to pull back. This rally will fail. Now, it may go up past 4200 a little bit, but it will fail. It will come down. Look, if we start the 1st of May, today, this is the bad part of the stock market. The half a year, that's bad. The next half a year, the market's going to be coming in, and I do think we're going to retest that October low. I think that for a couple reasons. Number one, bear market does not end before a recession starts, right? So we've had this bear market, and we came down, and it's not over. The recession hasn't even started yet, so we're going to go back and retest those lows. The other thing, when a bear market ends, you usually get capitulation. Capitulation when people don't even want to look at their stock portfolios. They don't want to open their 401k statements. They don't want to look at them anymore. They just want to cough up all the stock. That's capitulation. We never had that. So yeah, we could push it up a little higher, but my take is we're going to pull back down, retest the October lows. We'll see how that plays out. I'm sure your take is completely different. All right, moving over to the real estate market. Now, real estate market, well, it's fascinating to me. The rhetoric in the real estate market is that we've hit a bottom here. We've hit a bottom. Look, we're down about 13% off of the highs. Okay, and a lot of people are saying that's the bottom, and that's what they tell us real estate agents to tell our clients, to get them to go jump in and buy at these prices. Look, do you want to buy a house at this record bubble and watch it deflate? Maybe you do. I don't know. But I'm telling you, this house prices will come down, but they're pushing the narrative that we're down 13%. All right. Well, we went up 40 or 50%, right? I mean, we went up 40 or 50% during the pandemic, and we pulled back 13% from the highs. And right now, I agree there's low inventory out there, but that's about to shift. But they're trying to tell you that this is the bottom of the market. They're trying to tell you that we're going up from here. A lot of economists would call that a false dawn, right? In other words, look, there's a light at the end of the tunnel, and I get that, but that light is a train. It's a train coming at you. It's going to mow you over. If you jump in and buy a house here, you will lose money. That's my opinion. Your opinion may be completely different, but look, I'll be the first to admit supply is down, yes, but demand is down even lower. Demand's down even lower. The market's kind of frozen up. We're down about 30% in the number of transactions year over year. And this is kind of hurting the real estate agent a little bit. Do you realize 10% of agents have already left the market? Okay, well, that's nothing. We'll wait till it gets 20, 30, 40% of them. Then I know we're getting close to a bottom. But 10% have just thrown in the towel. There's not enough transactions for everybody. There's 1.6 million agents basically in the United States alone. And there's just not enough transactions to support all the agents because transactions are down about 30%. But the number of agents that dropped out or only dropped out about 10%. Now, a lot of people tell me, but Mike, houses can't go down right now. It's impossible. People are locked in at 3%. And these aren't weak buyers. borrowers. Like in the subprime crisis, we had a lot of subprime borrowers, and that brought the house prices down. Everybody thinks that these borrowers are strong. Let me tell you something. When you lose your job, you instantly become a subprime borrower because you can't pay back your mortgage. You have no way to pay it back. And right now, jobless claims, first-time jobless claims are at a 17-month record high. Okay, now these aren't normal people losing their jobs right now. These are people that were making $250,000, $300,000 a year. Now they go on unemployment and they're trying to survive on, let's call it whether you get, I don't know, $2,000 a month is about all you get, I think. So they go from making $250,000 to trying to survive on $25,000. They're not going to be paying their mortgage. They're going to become a forced seller, and the foreclosure rates are spiking up. They're spiking up a lot, and they're going to be starting to be dumped on the market. And you see this with things like the auto industry, right? The auto repossessions are just skyrocketing. Why? Because people can't make their car payment. And it's even overflown into the, motorcycle market. They're trying to repo the motorcycles. Now, a lot of those repo guys, they're getting shot at. You can read the stories. Well, you come and take their motorcycle, people get upset. They got guns. They shoot at the repo man. I don't think that's nice at all. He's just doing his job. But you got all these repossessions because people cannot afford the payments on them. Well, if they can't afford their payment on their car, on their motorcycle, believe me, they're not going to be able to pay their mortgage or their rent. There's going to be tons of evictions. A lot of evictions. Now, here's my take on that. A lot of evictions, right? All right. So you got about 4 million people right now not paying their rent. I think rent prices are going to come down, but not until you're allowed to evict these people. Look at, you're subsidizing the people that aren't paying their rent. The rents are high because you have to subsidize them. Look at, you kick out 4 million people, you're going to have so many vacancies that the rental prices are going to start to go in free fall, just like the house prices will start to go in free fall. But right now, those prices are propped up because we're letting people stay and not pay their rent. Now, the eviction processes are started. The court system's kind of clogged out. It's taken some time to play out. I don't think there's a housing shortage. I think the housing shortage is temporary, and it's temporary caused by what our government has done. Our government, first of all, they kept interest rates pegged at 0% for 13 years. But then we had this pandemic thing, and they said, well, you don't have to pay your mortgage anymore. You just stay in the property, we'll put you on forbearance. And they're trying to start that all over again, believe it or not. You see, there's a lot of FHA foreclosures right now. FHA loans are in default, about 12 to 15% of them. So the government goes, we can't have people getting foreclosed upon. Let's bring back the pandemic thing of the forbearance and let them readjust their loans. We'll get them out there 40-year loans, 50-year loans, but we don't want any foreclosure. It's going to take some time to play out. You got a government that doesn't want to see anybody kicked out of their house. You got a government that wants everybody to get a trophy. Everybody who doesn't pay rent should be allowed to stay, right? Well, I disagree with all that. There should be free markets. Look at, if you kick out 4 million people that aren't paying their rent prices will come down. Yes, some of those people will go homeless. Some of those people will live in their cars. Some of them will move back home with their parents. Some of them will do couch surfing with their friends. Okay, that's going to happen. I get all that. But if you can't pay your rent, it's time to go. Let someone else come in. And the rents will come down. They'll come down. They'll come down. House prices will come down. Will come down. Will come down. Once you start to allow the foreclosures to come onto the marketplace, what does that do? It adds inventory. Right now, let's call it 700,000 homes for sale right now. Well, 1.5 million people aren't paying their mortgage. Well, that would triple the inventory right there. That alone would triple the inventory. So you would get these people, you'd have to either pay or they'd have to move out of their house. Those houses would be dumped onto the market and the inventory would start to skyrocket. Look, we got 14 million homes vacant right now. Vacant in the United States, 14 million. These are mostly owned by rich people. Some people think poor people are owning these homes. Well, why would a poor person have a vacant home? I don't know. These are owned by rich people. These are owned by corporations. And speaking of corporations, they're failing right now. They're failing. Look at the iBuyers out out there. Okay, the things like Zillow already went out. Redfin and iBuyer, right? They're now closing down their program. Open Door, well, they're going to be forced out because their stock's going to zero. But these people lost money in the best times, the best of times. These home flippers, they had 0% interest rates in a really strong market for housing, and they lost billions and billions and billions of dollars. Why? Because the home flipping is not an easy business. Believe me, I've been in that business. I've done it many, many, many times. You got to have local knowledge. You can't do it on a national scale. They were crazy to try, but these home flippers, they're losing money. Do you know in March that 15% of investors sold their properties at a loss from where they bought them at? They flipped them at a negative 15% lost money. Okay, so that's not good, right? You want to flip a house, you want to make money, but 15% of the people that sold in March that were an investor ended up losing money. Why? Because the home flipping business is going down right now. Yeah, it works great. It works great if you're going up 20% a year. Buy anything. You don't have to even fix it up. Just sit on it for a month and you can sell it higher. But when things start to go down, these home flippers, they get their butt handed to them, and they're running for cover. Investors are running for cover. They want to kick their tenants out and sell that property, put it on the marketplace. Yeah, right now the market's frozen. I'll admit that it's frozen up right now. Transactions down 30% from this time last year. Now, if you listen to the mainstream media, they'll tell you this is the dawn, right? It's the dawning of a new age. We're going to go up from here, and people aren't going to sell. You see, they say people won't put their house on the market unless they can get the price that Billy Bob got. Well, Billy Bob got out a year ago. Now, a lot of people in the comments tell me their house is way above the price Billy Bob got already, because in your area, prices only go up, and that's fabulous. So maybe you can be the new Billy Bob. Maybe you can get out up here. But they go, no, Mike, I don't want to sell my area. It only goes up, and that's going to keep going up. If I sold, I can't get anything else. I'd be a renter. Now, renters are going to start to like to be in a renter because those rents, I'm telling you, they're going to be coming down. This is my take. This is what I believe. Look at pending home sales down 30% year over year, right? Okay, that's frozen market. What happens in a frozen market? Somebody's got to give, right? Now, the buyers, they still want the properties. I agree. There's still demand for the property. The buyer wants to buy. He cannot buy at these prices. He cannot qualify for the loan at these prices. So what has to happen? Something's got to give, right? What's going to give on the seller side? Once it starts to break, it's like a dam that broke. All that water is going to be flowing out. The prices are going to be coming down. It's going to be circling the drain. A lot of people are going to panic. It's going to be brutal. It's not going to be pretty. I'm telling you, right now was the good times. These are the good times, right? I mean, we've only had 3 out of 30 banks go under. 3 out of the largest 30 banks. This is the good times. Because there's going to be a lot of more bank failures. There's going to be a lot bigger financial crisis coming. This is just the start of it. This is just the early days. Look at when it happens, credit freezes up. People won't be able to get a mortgage to buy your house. I'm sorry, they just won't. So you'll have to find a cash buyer. Cash buyers usually pay less because they know that they're the only game in town once the mortgage market freezes up. Once again, this is just my take, and it's a Monday, so get out there, everybody. Have a great Monday. I'm Tall Mike. Don't forget to hit the subscribe button. Bye-bye.